given everything we've just talked about, also, by the way, I sort of ignored the pandemic with Omicron running rampant across much of the United States. It's maybe you could take the view that it's a little surprising the market isn't down more.
Yeah, good morning, Brian, and thank you. It is a really challenging time, so I think you could make that point. I think there are a couple of corrections going on here. I think there's a correction in the end of the pandemic story, which you referenced, with some of the move away from companies that aren't supported by fundamentals. And that change in Fed policy, I think, has really pulled the rug out from under those types of stories. I think you've also had a massive rebalancing story, which is to say that with the Omicron wave, which hasn't been as much in the headlines lately because it's been crowded out by other news, geopolitical news like you referenced, it is still going to make the economic data challenging over the next few months. There will be a loss in economic activity from Omicron. There probably will be an increase in inflation. And that gives us a tight window here where we have a couple of months of probably not great news on the economic front and the inflation front. Longer term, I think it's a better picture, but I think you're absolutely right. This is a very challenging environment here.
Okay, so let's talk about what we know. The market prices in what we know and what it expects. We know, okay, that the Fed is likely to raise rates this year. They've basically told us, the dot plots say it. So the Fed, while a big deal, should be a known known. You've got the sort of known unknown about Vladimir Putin in Ukraine. What will he actually do? And hopefully, fingers crossed, it looks like we are seeing some turn down in the pandemic, as bad as it is in the South and parts of the Midwest and West right now. It looks like we are, fingers crossed, starting to roll over. So, Robert, knowing all of that, how do you see the next few months in terms of risk?
Yeah, it's a great question, Brian. And I do think the next few weeks are going to be challenging and risky. But I think what you touched on at the end there, the end of the pandemic in the way that it has been occurring, is going to be very positive. I do think that that will help alleviate inflation concerns. I think that will take some pressure off the Fed. And I think as we get these millions of workers back to work, that's going to provide some underlying economic strength. So I do think over the course of several months throughout the year, we do see a good picture for earnings. We do see a good picture for the economy. Yeah. It's just that we're going through a tough transition right now.
So quickly as we wrap, Robert, where do we invest right now? What are you advising your clients to do?
Well, anytime there are these tricky transitions, I think it's important to have balance, and I think that's the case here. So I think some exposure to the cyclical areas that have pricing power are able to defend profit margins. Those things like industrials and materials is great. Another area that we think is very strong is the sort of what I would call the real technology companies, the companies with real earnings, real business models that have continued to deliver regardless of what the environment is. So I think that balance still remains very important here.